Success in life is founded upon attention to the small things rather than to the large things, to the everyday things nearest to us rather than to things that are remote and uncommon. Booker T. Washington. My friends, each and every day, 10 to 15 minutes following these charts, keeping it simple, attention to the small things. That is following price movement. That's the only thing we care about, is accurately tracking that. I don't care what the talking heads say on TV. I care what the charts are telling me. And let's jump into these charts. I do have one favor to ask. You will see a link in the show notes. You will see, those of you who are subscribers, I just emailed you the volume chapter from the new book I would love you to take a look at. If you just listen to the show, then go to chartingwealth.com, read that chapter. You will find it downloaded there. I would really appreciate your thoughts, your comments, your edits on that. I have tried to take volumes of books and pack them into one chapter own volume, taking some of the lessons of Jesse Livermore, who the book is dedicated to. He was, of course, the master of taking volume, which we use on our charts. Those are these vertical rectangles at the bottom, green and red, of our charts. And we apply those and what is happening with volume to what we see in the price action, using the lessons that Jesse Livermore taught us, taking those to heart, and using them to help us figure out what's actually happening. So again, I encourage you to read that chapter. And if you guys, if anything's confusing, because I've worked so much on it, I just said, you know what? I can't read this anymore. I've read it, reread it, written it, rewritten it. I'm just going to put it out there and see if the folks that care enough to study with us every day would take a look at it and help me proof it. If something seems incongruous, it doesn't make sense, it is dense, particularly when you get to volume analysis itself, where I try to break it down and give you the down and dirty so that you truly understand what it is you're seeing when you see the anomalies, such as average volume as we see on the week of the 31st of July, and a very small spinning top, almost a doji. There is a lot that tells you right there about insider information, what's really going on. Attaching volume with that spinning top is very, very important, as opposed to seeing high volume and, of course, high price movement. That's one thing. That's what you sort of expect. But when you see anomalies, bizarre things that don't really make a lot of sense, what's that telling you in the charts? Here's another one. You see super high volume, just a regular size cam. It's bigger than some of the other candles, but the volume's just way out of line and peaking to a low of lows here. What does that tell you also? Shows you certain things that Jesse taught us. And then, of course, when the turnaround, higher than average volume and a spinning top. Again, that's what follows this red down candle with super high volume, plumbing the low. So important things to learn that I'm trying to get across to you in that chapter. So for free, just giving that out, asking you guys to help me edit it. Any comments you have on it, both positive and negative, would be most appreciated. Let's jump into these charts. Everything up for the day. Boom, we see everything moving up. Of course, as we look at the charts, at the weekly chart, you're not seeing all that much, are you? See that we're not hitting the low of last week yet. You're seeing that the volume, it's about close to where it could be for average volume by the end of the week. It could be a little bit higher that we've already closed out on Wednesday, but nothing super bizarre. We look at the 2-day chart, which represents just today. It's a green up candle, not a big one, but it is touching that weekly trend line. And look at this half-day chart. We had the market bottom out, which is, of course, where we hit our initial, getting out of our initial half trade at 1.62% up. And then it went a little lower here in the morning on Friday. This was Thursday afternoon where it knocked us out with a profit. And then it slowly has been moving up, popped up first on Monday afternoon, then on Tuesday morning, settling back a little bit on Tuesday afternoon, and then popping up strong on Wednesday, up 1.11%. We still have not hit, of course, even the break-even point here. We haven't pushed through the weekly trend line, so it's very important for us to see what happens tomorrow on the S&P 500. If it reverts back to the norm, as we see on the weekly chart, or if it pushes through and starts challenging our break-even point. So we will watch, wait, and see. Now, a little different here on the NASDAQ 100. We can see where it popped up on Monday morning, Monday afternoon, Tuesday morning, pulled back a little on Tuesday afternoon, and then boomed up, didn't it? On Wednesday morning and Wednesday afternoon, and penetrating both in the morning with the wick and then in the afternoon with the candle into that negative territory. Now, of course, when you hit this the first time, you could have pulled that trade on Tuesday at 9:30 after, of course, taking your profit at 2.43% and then sold the other half of your trade, putting a stop in right there. And some of you did that, and that is fine. You got out of that practice trade. And again, I put the caveat in here. We're not a stock calling service and education firm. I want you to practice trade and learn how to do this. And now we see the weekly trend line being penetrated. We see the wick penetrating on the 2-day chart too. It's sitting right there on it. Maybe tomorrow morning things will roll over. Don't have to get out yet if you stayed in, waiting to see if it's going to hit your trigger. Now that means that the market will take back from you your 2.43%, which is fine. You'll just break even and be out. Live to trade another day. No big deal. Again, we're looking for the long runs, right? So it's okay. You can set this up to do it any way you want. You can take the profit from that first half of the trade, put your stop right here, and when it pops up to it, you're gone. And you end up with making 2.43% on the first half of the trade and getting out and just waiting for another trade to do it for you. That's fine. You can stay in and let the market potentially take back everything to see it roll back over potentially and give you an even better profit. So that's what you practice this for, to see what you're comfortable with and also get used to how individual stocks and ETFs act. So that's where we are on the Qs. Let's look at 20-year bonds. Man, did they boom up 2.48%. Now, of course, we got knocked out of this trade with a 2.45% profit in the down move. And, of course, it plumbed even lower. Then we saw it starting to turn around and boom, look at that. It's almost up. In fact, it looks like it didn't quite hit the knockout point if you set your stop, to get out there. Again, something you could do. It hasn't penetrated the weekly trend line on the 2-day or the half-day. We do have a strong 2-day candle moving up. Doesn't mean things can't turn around and go back down, but man, it was a big day for bonds. We look at the weekly chart. Weekly chart still looks okay. I mean, we've hit a lower low this week. Well, it's not a big candle, but again, right there on the line. So keep your eye on bonds if you are in a bond practice trade. Gold is a slamming up, looks similar to bonds. Sitting there on the 2-day trend line, popped up, and again, it's pushed through into the negative. Now, this is one where I would probably for sure be pulling the trade when it popped back up in the morning. Why would I be doing that? Because we never tapped out on this one, did we? We got really close to the 1.48% profit on that down trade, but did not quite hit it, and then it popped up. So something for you to think about. Now let's go to Bitcoin lastly. Bitcoin, of course, has been in a down move as it slowly looked to accelerate down. We saw where Bitcoin has been down at this bottom since last week. And of course, in the afternoon, shot up 3.36%. Now again, it's not penetrated the weekly trend line on either of these, primarily because it dropped off so hard on these two-day candles. That is candle starting on Thursday the 17th, representing Friday the 18th, and Monday the 21st and Tuesday the 22nd. And we see still a red down candle on the 2-day, but you can see on this half-day chart where it really pumped up in the morning. So we'll keep an eye on Bitcoin, hoping that we're going to get a nice clean turnaround at some point. Maybe that point starting now. We'll see how clean a turnaround it might be, if indeed it is. Friends, thank you so much for being with us. Patreon members, I've already recorded the charting cryptos, commodities, and currencies, and the three-wave trades. I'm going to get those loaded up at the Patreon site for you as soon as we finish this show and I start getting it loaded up. So if you want those materials earlier than tomorrow, Thursday's email, where we send you the 20 weekly vertical crossovers and the three-wave trades and charting commodities, currencies, and cryptos, please go ahead and check it out tonight. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.